Joining me now, Forbes Media Chair and Editor-in-Chief Steve Forbes, and Dan Clifton, Strategas Securities Partner. Gentlemen, welcome, welcome, welcome. I want to get to Dan's fabulous tax-cutting story in a minute,
Sure.
but I begin with inflation, Steve Forbes. Biden blames businesses. I'm blaming the federal government and the Federal Reserve. Where do you come out?
Well, it's always the government's fault, and governments usually find scapegoats, whether it's the Romans blaming Christians, medieval times they blame witches, Richard Nixon blamed greedy oil producers and Arabs and the like. They always point the finger somewhere else, but the finger belongs to be pointed at them. They're the cause. If they didn't print excess money, put on excess regulation, you wouldn't have the kind of damaged economy we have today. What they should do, Larry, is let the economy heal itself. Step back. The American people will rise to the occasion.
Well, yes, of course. Stop raising taxes, stop raising regulations, stop government spending. And why don't we cut taxes for a change? But Dan Clifton, I think it's going to be hard to avoid taking away the punch bowl. I mean, it's going to be hard to avoid that. Now, again, Jay Powell is no Paul Volcker, and Joe Biden is no Ronald Reagan. So I think this may play out in a more difficult fashion. But I do want to get your take. The Fed is meeting today and tomorrow. They'll make an announcement tomorrow with a press conference and so forth and so on. To me, they're way behind the eight ball. That's one of the reasons for this crazy stock market. But you tell me, how do you see it, Dan Clifton?
I've never seen a divergence, or we've never seen a divergence between the inflation rate and the 10-year Treasury. The interest rates are going to have to go higher. And if you go back to the 1970s, it was a very long-tailed process before we got to the Volcker-Reagan moment that you just talked about. It took years to build up that level of backbone, and that's the same case here. So this is going to be painful. The Fed decided to keep providing the same level of dollars even as the U.S. economy began to reopen. There's excess liquidity that needs to be sopped up. And as you know, the federal government spent $2 trillion of new money last year on top of that liquidity still being out there. And so it feels really good on the way up. Now we're on the way down in terms of having to be able to deal with that punch bowl being taken away. I do, though. Yeah, I'm sorry.
No, let me just let me go back to Steve. Steve, I don't see a way around it. In other words, they've built up this excess money for 2 years. Some people say we've had, essentially zero interest rates for 10 or 12 years, a longer-term problem. But to Dan Clifton's point, this will have a long tail. This is not going to be solved overnight. And Steve Forbes, I'm concerned, the Fed is looking at these quarter-point target rate increases, which I think is nonsense with a 7% inflation. But more importantly, wouldn't the Fed be better off to just start pulling money out of the system that we didn't need in the first place and let the market set interest rates?
Well, exactly. What they should do is immediately stop the bond buying, not to wait till March, and let the portfolio taper off, to coin a phrase. That is, when bonds become due, you don't go on the market and buy another batch of bonds. As you know, Larry, they have $1.6 trillion of overnight money that they borrowed from the banking system and money markets. They should just let that start to run down. And on interest rates, let the market set the rates. And I think the economy would heave a sigh of relief. You're not going to have a bunch of bureaucrats trying to determine what the price of money should be. So the Fed, you're right, it's not going to be painless, but the quicker the Fed lets that money supply run down, especially that excess cash, banks are already brimming with cash. Their reserves are brimming over, so they're not going to put the economy in the kind of recession we had to have in the early 80s. They can nip it in the bud relatively early to what we experienced 40 years ago.
Well, that excess money, I mean, to your point, you've been saying this for months, the banks and the money funds are giving the Fed money. I mean, the Fed is doing these so-called reverse RPs. They're just taking money out of the economy on a daily. But they got to take out a lot more because they keep injecting money. They keep buying. I mean, it's a head scratcher. With housing prices sky high, they're still buying mortgage-backed bonds. I mean, that has to be. I won't say it's the stupidest thing, because today's world, there's so many stupid things. But that's one of the stupidest things that there's around. Now, Dan Clifton, too much money chasing too few goods. So suppose, Dan, we increase the supply of goods. And that brings me to your excellent piece Friday, January 21st, states are cutting taxes. Dan Clifton. Of 22 states that held State of the State addresses in January, 16 governors announced plans to cut taxes. We had Governor Reynolds of Iowa on, I think, last night, who's one of them. A couple of those states, by the way, are even Democrats. Now, this is the best news. Dan Clifton, I'm not going to say this is the greatest piece you've ever written, but I'd say it's in your top 3. I've been reading you for years, and this is what I want to read about. And in fact, if you put the inflation chart up again, I mean, the solutions to inflation, tax cutting was, I think, 3rd. So there you go. Tell us about this, state after state.
Yeah, let me make this point. When Trump did his corporate tax changes in 2017, the Democrats argued that it was going to stoke inflation with a low unemployment rate based on their flawed views of inflation and employment. And in fact, we cut tax rates and got higher wage growth and lower inflation. And it really was a great period. This just goes to show you what's going on outside the Beltway is much more in tune with the voters, and where your polls say that you now have all these governors saying it's time to cut taxes. There are 3 themes in these tax cuts, Larry. The first, as you mentioned, flat taxes. The governor of Arizona, the governor of Iowa, they're saying to the big taxing states, you want to go to 13%? We'll go to a flat tax. We want your capital in our states. The second theme is lower marginal tax rates, even if you're not going to go to a flat tax. That is very, very encouraging because that will increase the incentives for work, save, and investment. And third is attacking the inflation that is being caused elsewhere. I'm not really sure tax policy is the best way to do that, but a focus on groceries and gasoline. And it just shows you that the governors are far more in touch with where the American voter is than the bureaucrats in Washington today.
Well, these sales taxes, they do boost local prices, and they are obnoxious. So it may not be the most efficient, but there's nothing wrong with it. Steve Forbes, I mean, I see this as a fabulous development. And, Steve, I think we need to make this into a national message. I have said many times to you and Steve Moore and Art, for example, we should make the Trump tax cuts permanent. That should be a GOP or conservative rallying cry. By the way, Democrats are welcome to join. But you've got here the makings of a supply-side renaissance, is how I see it, from the state level. Can we nationalize this, Steve Forbes?
Well, that's going to be up to the Republicans, candidates running for the Senate and the House, and I hope they do it. And that's why we got to get the message out. A number of states are not only reducing their marginal tax rates, are putting in programs and goals to eliminate the state income tax. You see it in North Dakota, Arkansas, Louisiana, West Virginia, South Carolina. Candidate running in the Georgia primary, former Senator Perdue, wants a zero income tax rate in Georgia, phasing in it over a period of time. So the Republicans should go for a flat tax. They should go for big tax cuts. Let the Democrats bleat. Oh, that's not responsible. Letting people create resources and keep more of those resources to put them productively to work. I think that's a winning issue. And also puts the Republicans on the positive side, not just playing off Democrat mistakes, but also having a positive program to get this country moving forward.
Dan Clifton, I don't see New York on this list. I don't see California. I don't see Illinois. But my eyes are old. I don't see New Jersey. My eyes are old. I may have missed something. Are these, do I need new glasses, or are these blue, left-wing blue states behaving like left-wing blue states?
First, just looking at State of the State addresses in January ignores the fact that California and New York have been raising taxes for years. New York did a monster tax increase this time last year. They now have a 13.3% rate. Most of the reason why these other states are cutting taxes is to continue to attract that capital outside those states. The governor of New York said, oh, we're going to cut taxes. We're going to do targeted tax cuts this year. But she ignores the fact that she did that big tax increase. And this is the issue here. New Jersey says, well, we're not going to raise taxes. Well, you did it for a couple of years before that. So, of course, that's not a win here. Jared Polis, the governor of Colorado, keep an eye on him. He's a Democrat. He wants to lower marginal tax rates. He's starting to realize that there's tax competition. And Larry, let me just leave you with this final point. The level of state migration last year, in the last 12 months, doubled than what you saw over the last 10 years, doubled out of the high tax states and doubled into the low tax states. So what was the greatest wealth migration in history just went on steroids in the last 12 months once COVID began to start. This is a historic shift, and public opinion is on your side for this supply side revolution at the state level.
Mississippi governor's Democrat wants to abolish the income tax. It didn't make your but that's what I'm reading. Steve Forbes, I just want to, one last thing. You know how we railed against their banking commissioner nomination, Omarova, who went to Moscow State University, the Biden nominee, and she was defeated ultimately with a bunch of Democrats voting against her. I just want to put this in play. One of the Fed nominees, Ms. Lisa Cook, believe she's the one that teaches at Michigan State. I might be wrong about that. I'll have to check.
She does.
Yeah. So I don't know if you've seen this, but these are tweets and clips from her in 2020, just so, you know, a little more than a year ago. America is systemically racist. President Trump is a fascist. His administration was leading the country down the path to a genocide similar to the Holocaust. And then outside of this, she also publicly criticized uneducated people she called NASCAR folks. And then she also talked about bailing out rioters in 2020 as they were burning down cities. I raise this, Steve, because this is another crazy far-left woke nominee, in this case to the Federal Reserve, who will probably not care one whit about helping Jay Powell or anybody else to reduce inflation. I'll give you the last thought.
Well, it's absolutely right. And it shows this administration is addicted, as we've discussed before, to modern socialism, where they use regulation to achieve their goals. She wants to have banks do certain loans and bar other industries and companies from getting loans. She wants to run the banking system, just as that graduate of Moscow State University. Sadly, the teachings of Moscow State University weren't confined to Moscow. They're all over the campuses today.
Right.
And this new nominee reflects it.
Yeah, I just want to put it out there. There'll be more on this as time goes on, but this is just coming out now, what she said. It's just far-left nonsense. Anyway, Steve Forbes, thank you. Dan Clifton, it could be your finest hour. You and Winston Churchill, the finest hour. Can't thank you enough. Resuscitating supply side.